here daily, and we're at the Inside ETFs conference in Montreal. We're talking with Paul Kornfeld from SIACharts. Paul, thanks so much for joining us today.
Yeah, thanks for having me. It's a pleasure to be here. It's a great conference just to meet a lot of the ETF strategists and different providers here, but most importantly to learn a little bit more about the industry. As SIACharts, what we try to do is really partner with advisors and help them, not only in the ETF side, I mean that's the focus for this conference, but help them build strategies and market that and take that to the next level. So it's something I'm very passionate about and really care about the advisor. So that's one of the reasons that I'm here, is to learn more about the industry and take that back with me so that we can help better partner with the issues that advisors are having.
Likewise, Paul, it's great to finally meet you and have this opportunity to talk to you. Now, there was an interesting conversation earlier today that took place with Matt Hougan and Dave Nadig with regards to technology spending by advisors, and you had an interesting point that you wanted to share about that.
Yeah, one of the things they saw and brought up on one of their slides was that on average, advisors spend around $10,000. Don't quote me quite on that number, but there was a wide range from basically zero or very low amounts of money on technology, all the way up to some advisors spending hundreds of thousands of dollars on their practice. And this might be grouped in with some asset managers. I'm not sure on the exact statistics, but the takeaway that I took was that in other industries, if you think of outside of finance, outside of the investment advisory industry, people are spending a large amount of their business on technology for efficiency, for production, for whatever area of their business that they maybe are lacking on or can improve on.
Right.
And one of the things that I see constantly working with advisors is that ratio has not made its way to finance, to the investment advisor industry. Fintech is one of the most growing areas in the U.S. and in Canada. We're seeing more and more of that investment in terms of companies and robo-advisors, all these different things, however you want to categorize it. But you haven't seen that really take hold with advisors. So there's actually a huge opportunity for advisors, in my opinion, to take that next level, invest more in technologies that can help them and help their business really as a competitive advantage. Whatever area they may be struggling with, or maybe they don't even know. A lot of people go to business coaches, things like that. That's great too. That can really help their business. It's expensive, but they're investing. And I think that's the key thing. If people really care about their business, you're going to have to spend money. Just like in a marketing budget, we were just talking earlier, you have to spend money to tell your story. And you also have to spend money on technology, whether that's programmers, whether that's software development, or with actually buying CRM tools, marketing tools. And in our case, what we try to do is help the advisor on the portfolio construction and management, alerting, and telling the story and modeling too.
You know, we've had conversations within advisor analysts just about the debate between, at least the controversy that advisors have had to deal with the rise of robo-advisors, for example. Why not integrate some kind of robo or fintech in your business? So, it requires an investment in technology. It requires a spend. But I had another interesting conversation with an advisor, for example, who uses SIACharts, your platform. Now, you're well known for creating having this platform that identifies relative strength opportunities for advisors, as well as helping to manage risk on an ongoing basis, when to get into positions, when to get out of them, and you guys have had a lot of success with that. Now, so that's what you're well known for, but I think what you're less well known for is something as simple as being able to answer perennially to your clients the question of how am I doing? You know, in the past, that's been a terrifying question for advisors. But I think, again, there's an argument for investing in technology.
Absolutely, and that's one of the core features we've actually built. One of the interesting things about our company is, again, I was an advisor myself before this, but we've built up these relationships with advisors. We take that feedback and we build tools for their day-to-day business.
Yeah.
It's not built for asset managers or day traders or things like that. It's built for advisors that want to tell their story or other tools around the portfolio management conversation. We don't do it all, like you said. We don't have a trading platform or something, but what we do have is the ability to model a portfolio that you're seeing so you can compare your performance, your risk ratios, your Sharpe ratios, your process, help tell that story to your clients, and not just your clients, obviously, hopefully prospects, and help them market their strategies so that they can stand out in a crowded industry. We want to give them a competitive advantage that's not only efficient in terms of time management for themselves. They're not doing this in Excel or just the long way.
Breaking out the spreadsheets
exactly.
and doing it manually.
There's ways to do that with technology, whether that's our system or other technologies. I think it's just important generally to invest in some sort of technology that's going to take your advisor practice to the next level. And that's, like I said, that could be our system, other systems, but something to give yourself that competitive advantage from a time management standpoint. You might not even ever tell your clients what you're doing, but you're showing them the fruits of that labor, of those models that you're creating, and the performance value add that hopefully you're also providing.
It overcomes the concerns about that CRM2 has raised sort of industry-wide, in some ways large, and in other ways no big deal. But it does away, like the argument of establishing your value as an advisor and being able to disclose fully the costs of the services you provide and why you're worth that as an advisor. I mean, compensation, people who do good work, people who advisors work very hard, frankly, and people who work as hard as advisors do to develop financial plans and to help their clients to achieve their goals should be compensated. But all too often the problem is that investors don't understand the difference, and so you have to be able to describe it. Mm-hmm. So coming back to what we were just talking about, which is such a simple thing, it's such a simple idea, which is that for a relatively small investment in technology, you're able to do away with one of the great concerns of both the investor and the advisor. Yeah. And that's a conversation. It's great to have this conversation with you and to boil it down to something very simple as being able to answer two questions. Number one, your core technology, which is security selection, when to do it, when not to, when to avoid, or when to pause, when to wait, which is a question all investors have. How do you know when to do these things? And being able to answer that with a rules-based technology that you guys have developed and that's been proven to work. That's the answer to one question of being able to provide value to clients. The other side of it is how am I doing? Yeah. Again, it's a terrifying question for advisors. Historically, it's been a terrifying question for advisors because of all the date changes, trades, things that change within a portfolio, all the moving parts. There's so many of them, and establishing a accurate book value versus market value, and being able to say to your client, this is how you're doing the last 3 months. This is how you've been doing the last year. This is how you did the last 5. So to me, that's a very strong argument for investing in technology. Yeah.
And I'll touch on your first point, first question, and then get to that one as well. Like you said, I mean, we're at an ETF conference here. And so one of the things that kind of bothered me today is there's a lot of people here talking about all the solutions, but how do you pick? There's, between Canada and the US, again, correct me if I'm wrong, about 3,000 ETFs. Yeah. Canada's launching 100 probably this year alone, if not more, by the end of the year. Yep. US is 100 usually a year, and obviously there's closures as well, but there's a lot of ETFs just alone there to sort through in different asset classes, different areas of the market, different risks. You need a tool to help you figure out just even ETFs alone. If you're looking into that, what is the best Canadian ETF if I want to get exposure to this sector or this area of the market, or a smart beta factor, or you name it. How do I get exposure to Russia or to an international geographic sector?
Well, how do you subjectively explain?
Exactly.
This is subjectively. I think this is the best. This is the best ETF in the category, or do you objectively say this is actually the best ETF in the category on a relative strength basis. This is the one.
Yeah, so you can't spend all of your time as an advisor just researching each of these. And we're just talking about ETFs. You add in mutual funds, stocks, the whole boat. You're talking 60, 70,000 securities that you're going to have to do daily analysis on. I had an argument, I guess, with an advisor one time that he was so convinced he had to do total company research on every company in the S&P 500. That was his job. I was like, it is your job. There's tools to help you get there a lot faster than completely breaking down the whole fundamental aspect of each company, the whole technical aspect. There's certain things that I'm sure each advisor uses more than others, but one of the first things that we try to do is like you were talking about, help save the advisor time in terms of just portfolio construction or point them in the right areas, whether that's risk management. Should I even be in or out of the market? Asset class rankings. Should I be in US or Canada, international, bonds, cash, wherever, again, those opportunities are. And then obviously all the way down to the selection of investments or ETFs in this area so that they can create strategies that are scalable for their business, whether discretionary or non-discretionary, it doesn't matter. We can still help with that area. So from a standpoint of value add, we want to save advisors time, give them a competitive advantage their clients can't get. They can't get access to our system, so we want to, again, empower the advisor with technology so that they can have those conversations, set the right expectations for their clients, and then, like you said, the last step is to tell their story. Here's what I'm actually doing for you. Here's my value add. Okay, we're only up 2% this year. That could be a value add if, again, the market's down.
Exactly.
That's part of the expectations. It's not all about performance, it's about the risk, it's about all the other aspects that you described that the advisor's doing. And again, that's our passion, is we want to equip the advisors, but you have to invest in technology.
Well, you
have to partner with somebody, because even us as a company, we can't do it all ourselves and give the advisor everything that they need. We have to partner with other companies, or again, there's other resources out there too to take that next step. That could even be their own company's research or tools too, including robo-advisors. I mean, what are you doing for your smaller clients, your $5,000 RSPs or TFSAs? You won't make money by allocating all your time and resources here. There's funds, there's ETFs, there's things that can kind of help you get there so that you can spend your money where it really matters, which is growing your business. I talk to a lot of advisors across the country, US and Canada, and the most successful ones that I talk to are actually spending some of the least amount of time on their investment selection and worrying about all these areas. Not that they don't do that, they're using tools to help them make those decisions faster so that they can go and do what's really important, meet face-to-face with the clients, calm their fears, or encourage them that what we're doing is working, we're sticking with our process, or here's what we're going to change because something was off here, we've made a bad call or right call. It doesn't matter. They're doing what they are signed up to do, which is help those clients manage those expectations and help them grow their wealth, hopefully over time, for the goals that they're reaching for their clients.
Yeah, there's a lot to be said for investing a little bit of your time and effort and money in something that will liberate you from the subjective burden of security selection, number one, so that you can actually objectively say to your clients, we have a rules-based system to do this. So we're not saying it's not out of sheer just preference. It's objectively, this is the way to go. And then on the other side, objectively, freeing yourself of the burden of having to manually manage performance calculations.
Exactly.
Paul.
And that's it's not a good use of anybody's time, including my own. So we built tools to help us do it for ourselves and our wealth management strategies that are using our technology too.
Yeah.
So.
Paul, it's great to talk to you.
Yeah,
great
really
to see you here at the conference, at the Inside ETFs conference. Thanks so much for coming and chatting with us.
Appreciate it, Pierre.
Thank you.
Thank you.